came to this country with a tremendous desire to achieve something like classic American dream. I had to become successful. Failure was not an option. I went back to India. It will be a very shameful existence. Looking back, I probably wouldn't have done the way I did things. Keep doing. I was building in Florida, living in Mississippi, and spending money like crazy. Whatever I do, it comes with so much passion that generally wins. One thing led to the other, and my first investment was in 1991. If we take that attitude that I just don't have another option but to succeed, I think you will succeed.
Investors, welcome back to another round of Masters of the Market. Now this week, I cannot be more excited to have on the show with me Dr. Bharat Sangani of Encore Enterprises. He is the CEO, and over his 30-year career in real estate, he has managed $2.9 billion worth of real estate transactions. So quite the professional. Bharat, I want to get right to it in this episode and just ask you about your story, how exactly you got to where you are today.
That's a very interesting question, and I do want to put a qualifier that my daughter usually reminds me. She says, "Dad, your story is so boring. Keep it short or you will put people to sleep." But since you asked, I'll try to keep it as brief as possible so people don't go to sleep. There's really nothing exciting about my story per se. I'm a cardiologist, a heart specialist, came to this country with a tremendous desire to achieve something like classic American dream, right? Developed into a practice which was established in Gulfport, Mississippi, a small town of about 100,000 people. One thing led to the other, and the practice grew, and we ultimately had 70,000 patients in our practice. So everybody and their brother was my patient, and we were in the 99th percentile of the size of the practice in the entire country. So I'm just used to being at whatever I do, it comes with so much passion that generally wins. So then I recognized that I was working 24 hours a day, being the only board certified cardiologist in the town to start with. Had to think about doing something else because nobody can work 24/7 for the rest of their lives. Also, I come from family background of a businessman. I was the first doctor in my entire family. One thing led to the other again. We started with just investing in one hotel, and my first investment was in 1991. And you can imagine I was fairly young at that time. In fact, if I would go to see patient, my wife made me wear glasses without numbers and made me have this beard just to create some age. So the patient, before that, I would enter in the patient's room and they will say, "Where is the doctor?" At such a young age, I could take enormous amount of risk. And again, whatever I started doing, started working. Looking back, I probably wouldn't have done the way I did things, but since success is the best aphrodisiac, right? When you start winning, you just think you are the king. Then king can do no wrong. So I just felt like I can keep doing. So I was building in Florida, living in Mississippi, and spending money like crazy, investing, and things started working. We continued to expand, and then finally, in 2005, we ended up with an institutional money. By that time, we have grown enough. One of the subsidiaries or the partners of Rothschild joined us and invested about $85 million of equity and $150 million worth of debt. So kind of infusion was in our company in 2005. At that time, Katrina hit. I think it was 2004. Then Katrina hit in 2005, and we were completely destroyed. And finally, we recovered out of it. And by that time, it was quite obvious that we couldn't stay in Gulfport, Mississippi because of the institutional money that was involved. So they requested that we are happy that you survived this time, but we need to make sure that this doesn't happen to us again. Just to give you the climax of it, we had about 87 employees in the corporate place in Gulfport, Mississippi. Across the nation, we probably had 2,000 employees, but out of 87, 37 people lost their house between 5% and 95%. during Katrina. I was one of those who lost 95% of my home. And people thought that I didn't even survive. So in one of the churches, they had my eulogy when they couldn't find me, that Dr. Sangani is no longer with us, and he was a good doctor. And I was listening on the radio. So actually, I felt good that somebody was saying good things about me when I was not around. But again, putting the humor aside, we didn't think that we would survive through this onslaught of nature, because everything was shut down, everything was broken, the whole corporate building was gone, our servers were gone, we were not connected to the world, the roads were blocked. So we thought the game is over for us. But again, king can do no wrong, right? How much do I know? So everything again worked out. And actually, the business flourished after Katrina. The hotels didn't have roof, but people would still come and stay with us and pay 2 to 3 times what they would normally pay. So we were rolling in money. One thing led to the other. We continued to expand our businesses. If you take the story forward till today, then we have now expanded ourselves into multiple areas of real estate, multiple areas of operating businesses, and quasi-private equity situations where we invest money in different cash flowing companies. Till last year, as you mentioned, we have done several $billion worth of assets in transaction. We own several $billion worth of assets and businesses. Most of them are 100% owned by us. And we had, at the peak, we had about 4,000 employees in the company, roughly about 27 states in the country. So that is my story, and I'm sticking to it.
Doc, my first question for you to follow up is, does your daughter know the whole story, or does she only know the snippet of the story that's like you just run a business? Because that is anything but boring. And I have so many questions now for you. First of all, I want to talk about this notion of like the American dream. And I see this often where, the immigrant comes to America and makes it big. And if they don't make it big, I feel like they work 10 times harder than someone who's just born in America. Where does that real grit and tenacity come from once you get to the United States? And can that be something that we all can capitalize on? Because you're a testament to exactly what can happen if you just put your head down and work.
Well, that's nice of you to say that. I haven't really achieved anything as far as I'm concerned, but whatever little I've achieved, I think, is basically passion and hard work. And the real differentiating point that you were really looking for is, I had no place to go. When I came here, I had to become successful. Failure was not an option. Yes, I could go back to India, but if I went back to India, it will be a very shameful existence. And I will not accept that, because people will look at me and say, look, failure, you came back. So there was nothing I could do except to win and except to succeed. And I think if once you're put into that position, I think you usually win. So I think, going back to your question, I think if we take that attitude that I just don't have another option but to succeed, I think you will succeed.
Today, just looking around the United States, is parenting a problem? Like, are we really too soft on a lot of kids? Because I feel like, at least in my story, right, I didn't have the cushiness of parents to fall back on. So it was like, I'm just going to put my head down and work. And then you mentioned also passion, which is key. And so you almost had these two elements, drive and passion, come together, and this no fallback. What's your stance on parenting today? Are we too soft?
Well, it's a mixed bag. And let me explain what I mean by that. Just to give you a little example, our discussion goes on, you will find that my life is full of stories. So just to give you how I was raised, one time, my dad, in a very early age, maybe I was in the 5th grade or so, and he wanted me to learn how to do business. As I told you, we are from a business family. So he bought me some lottery tickets, and he made me take those lottery tickets and stand outside the house, start selling lottery tickets, and said, son, this is how you will learn the art of sales. So I'm standing outside and trying to sell the lottery. Well, there is another 250-pound kid, large kid came, and he looked at me and he hit me on my cheek and took few lottery tickets and ran away. So I started crying and I went upstairs to my dad and I said, Dad, he said, why are you crying? I said, Dad, that 250-pound gorilla just came and beat me up and took some of our lottery tickets. So he says, oh, really? He said, come here. Which cheek did he hit you? So I showed him my right cheek. He hit me on my left cheek. and I said, what was that about? So he said, let me teach you something. When you are in trouble next time, if you can beat that guy up, you beat him up. And if you don't think you're going to beat him up, then run. Just don't come to me.
Wow.
So at a very early age, I was given the lesson that I need to solve my problem myself. And I think that stayed a long time with me, it's still there with me today. But taking the humor aside, I think today's parenting, in a lot of ways, it's better than what it was before. I think the parents are much more cognizant about their children and their growth than they were in our time. In our time, the kids was supposed to figure out everything by himself or herself. I don't think that's the case right now. The amount of resources available to a young kid is enormous as compared to what we had at our time. You are a lot younger than me, but I'm talking about my generation.
Mm-hmm.
The sorry part is that we have created a society of entitlement, and everybody thinks that we are entitled to something, and that percolates into our kids too. And the moment you have a sense of entitlement, your growth subsides. It just doesn't continue the way it ought to be. So I think it's a mixed bag. There are a lot of good things are happening in parenting today, and not so many of good things that I would like to see. But it will take a whole new session for you and me to talk about how I see a successful parenting.
some slaps on the cheek and get out there and do your thing. I think it's one of the most epic stories I've ever had on Masters of the Market, so I appreciate that story. Okay, so second question here for you, just before we get really into the roughs of real estate. You started off in cardiology, and okay, you could have made a decision to say, I have a lot of patients. I'm overseeing a lot of patients. Let me scale back, or maybe find, another cardiologist to come and work with me. We partner together. But no, you decided to actually totally, stop, press the brakes there, and buck into real estate. So why the change of course as opposed to just slowing down and seeing less patients, or even moving away from the area? You kind of doubled down on the area and chose a different industry.
True. I think, as we discussed before, I come from a community which is full of business-minded people. I mean, business is in our blood. I was the first cardiologist or the first doctor in my entire family. So when I saw that I cannot keep up the same pace, I had to figure a way out to create wealth for my family, for myself. And business being in my blood, it was very obvious that something had to be done. And real estate is very, very common for our community. So if you look at it, at one point, 70% of all the hotels in this country were owned by Patels, who are basically Indians. So that was very, I really didn't have to look for a new business. It just fell in my lap just by knowing what other people from my community do. So that was the impetus that made me do what I ended up doing.
Just looking around for some Patels. Okay. Here's option two. So let me ask you this, Doc. How do we, us out here on this side, how do we know if real estate is the right fit for us, or if we should maybe just veer into the stock market? I mean, it's a lot easier. It doesn't require as much capital. We can get going today. Or we can maybe save some capital, put on the sidelines and really think about a good investment property to scale a real estate investment portfolio. How do we know if it's for us?
You know, out of this our entire session, if we just can concentrate on this one question and take the message home, I think we would have made a lot of favors to a lot of people. And I'm not just saying because of the knowledge I've acquired, I'm saying more because of the experiences and the number of people who have come to me talking to me about their experiences too. The first and the foremost thing about investing in real estate, whether it is for you or not, is do not copy others. Just because your friend bought a stock or just because your friend invested in a hotel, that doesn't make you should be doing it. So keep that first in mind. Everybody is different. So first figure out, do you have the resources and the temperament to be invested in real estate? So now we go to step two. So first step is ignore what your friends and family is doing and invent yourself. And what I mean by inventing yourself is you need to figure out, do I want to do real estate myself, or do I want to invest in somebody who knows how to do real estate? So there are two very separate, again, paths. So the first path to do the real estate yourself is most important here are, number one, do you have a capital that you will not need for the next 5, 10, 15, 20 years? If you are going to be dependent on this capital at any given time in the future, you should not be in real estate, because real estate is illiquid investment. And you'll be very sorry if you end up something where you should not be there and you need money and then you get a serious problem. So number two, if you're going to do the real estate by yourself, do you have enough hours in the day? Because if you are going to be a doctor, if you are going to be a full-time job someplace, and then you say on the side I'll do real estate like I try to do it, you'll be guaranteed higher chances of losing out your investment. I was just a lucky person. I've always told you, I don't think I was smart. I don't think I'm even smart today, but luck has favored a lot, and whatever was left was filled in with passion and hard work. But if you don't have enough hours in the day to literally give it to the business to run like a business, as if 100% of your energy, your efforts need to go to that business. So that's number two. And number three is, do you have an ability to manage people? A lot of people don't. And if you don't know how to manage people, then doing real estate by yourself is not your cup of tea. So now we go to now you have figured out, now you invented yourself, now you have figured out that you can or you cannot do real estate by yourself. And assuming that you cannot do it by yourself, if you fill all these criteria, go ahead and do it. You'll be fine. Now you go, should you trust somebody to do the real estate? And that's where, again, first criteria there is, don't invest because your friend invested there. You need to do your due diligence. You need to check your references. You need to see this person's track records. You need to make sure that whatever this person is telling you is making sense. Listen, any business, if it is too complex to understand, that's not the business for us. All business is, when you get into it, you should be able to understand in a very few sentences, or it's not the business for you. So if somebody does not present to you that way, doesn't have a good track record, doesn't have enough references, these are not the people who you want to do business with. And the last piece here too, again, is same thing like before. Once you put money with somebody in real estate, it's illiquid money. If you have a particular need at a particular date, real estate is not your business this way or that way.
So I want to double down on that, because we hear oftentimes that real estate is one of the most purest passive income streams one can create for themselves. But you're here saying that's not the case. Real estate is a full-time job, and you got to be in the game Can you double down on what you mean by it's not necessarily just a passive income stream where you can kick back, maybe have a full-time job, real estate on the side? I mean, some people maybe they make it look too easy, or maybe it's not the truth that we're seeing.
So you're partly correct. If you go this route, the first path I mentioned, that you're going to buy, you're going to run, you're going to manage, you are the manager of this particular real estate. Yes, it is not a passive income. It's actually active income. But if you do find an individual, if you do find a company, and if you invest in there, and if that investment goes right, then you will get passive income from it. But you must follow this criteria. Unfortunately, for doctor, he needs a license. For being a lawyer, he needs a license. For being an architect, he needs a license. But to be a real estate person, to take somebody else's money, does not need license. So you do not know whose company you are keeping. And mind you, the people who really do not know their business with their sweet tongue, they can really fool you and then take your money away. So as long as you avoid that situation, real estate could be a good passive investment if you go on the second part of the fork.
Now, how essential would you say real estate is for an investment portfolio? I mean, a lot of us probably have some form of an investment portfolio. I'm assuming many of us in the stock market. Would you say that it's essential? And if someone's really looking to accumulate wealth, is it essential that we have a real estate portfolio? Maybe it's not in physical property, maybe it's through REITs, but how essential is real estate to success?
That's another very good question. So if you take, let's say, 20, 25 years ago, the story, and if you looked at, went down the Forbes richest people on the earth, almost 70 to 80% of the people were real estate moguls. Real estate
All
was the
Patels.
way. Not necessarily. The Patel started very low. I think the rest of the people had figured it out better to stay more professional, and then they really made it happen. But over the past 20 years, the technology has taken over, and you don't see the primary business as a real estate in the top 70, 80% that it used to be. It's still there. It has number of percentages have gone down. But the reverse has now started something different. All the technology people who have made money, they've all gone back and invested in real estate. So if you look, they have become real moguls now, owning significant amount of real estate all over. So that makes me feel that real estate should be part of your portfolio, one way or the other. Now, let me reverse that and tell you for who it is not part of the portfolio. If you are literally living hand to mouth, and if you do not have any savings, and then you just don't have any extra disposable income that you don't have to count on, real estate is not for you, especially passive investment like you were talking about. So because you don't have enough money to invest, right? And then you don't know when you will need that money. So this is the group of people I would not recommend that they should even think about real estate. But what would it really help are the people. If you can become an active investor, the path A, which I mentioned when I was discussing, these people can now take active depreciation from the real estate, and whatever income they have, operating income or any other income, if they're active there too, they can actually commingle that depreciation and really lower their tax burden. For those people, I think real estate is a must, must, must. The wealth building is also important. In real estate, if you do the right way of investing, real estate for non-technology people, that probably in my mind is one of the best way to build wealth for their future.
So it's interesting because there's quite a fair amount of people who are out there, younger, who start off and they jump right into real estate and they try their odds at real estate. They put all this money on the sidelines, but you're really saying that's not the wisest approach. You're going to want to make sure you have a much bigger cushion before you jump into real estate. So to that end, how much, when do we know we even have enough?
So here's what I normally say, that find out what is your yearly expense. And then you say, okay, assuming starting tomorrow, I will not have the job or I will not have that source of income. And then multiply that number by 2 years and keep that number aside. I think my fingers gave that that balloons. I haven't done anything to talk about balloons yet. But anyway, so once you put those 2 years aside, 2 years of cash aside, and then you have an additional money, then you can start thinking in terms of investment, because now you will not need that money for the future. The most important point I want to drive in people's mind home is that do not think that you invest money today and you can pull it out tomorrow, day after, year later. It's an illiquid investment. You must think as if the money is gone and it will not be available to you for a foreseeable future. And if you can answer that question, yes, real estate is for you.
So I have quite a few questions about debt, but before I get to that, I always, on my channel talk about this, this notion that a lot of investors have, especially the young ones, of trying to, what I like to say, get rich by Tuesday. And that's really not the wealth accumulation game. How do we train patience? How do we get in the mindset of the long term is the best term? Can you give us any insights there?
You need to write it down every single wall you can see at your home and say, real estate is a long-term investment. Stay away from anything else. So if you write that down, no, you're again putting the humor aside, you are 100% correct. Do not listen to your friends. They may tell you I invested in a multifamily and I took money out in 6 months and I made a lot of money. I'm not saying they're lying. Maybe they are. I don't know. But even if assuming that they are not lying, that is not a general experience. That is not what happens to everybody else. And anytime you look at a business, anytime you look at anything, you always want to look at the statistics. If the statistics is not in your favor, don't do it. Now, you may be somebody exceptional and something good can happen, just like happened to me. As a statistician, if you take this, that statistician will tell me 85% of the doctors lose their investment, the principal, at some point in time. I just happen to be one of those exceptions, but it wasn't my doing. I just happened to be at the right place at the right time. But it doesn't happen to everybody, right? So why take that risk? Always think in terms of what are the statistical probability of this thing happening. And I think if you just make that decision with a sound head on the shoulders, you will not repent.
I almost feel like we're missing that. We're missing a lot of the due diligence because we have the mindset from wherever it stemmed from. I mean, it's this instantaneous gratification type of culture that we're creating. But I think because of that, we're losing out on more wealth opportunities than we're gaining from that mindset, because it really is all about the long term. How did you know? I mean, going into real estate and hotels, I mean, specific, that's a long-term game, but how did you know when it came to investing that this was the mindset, that this is what it was going to take and you're not going to be an overnight success? And how did you overcome that?
I guess that is part of my culture. That's how I was raised. We are from business family, and we always knew. And over and above that, talking to lot of people, and you should always try to find a mentor. If whatever you don't know, you should find a mentor and make sure that the mentor approves what you are trying to do. And that's why I created my mentorship program. So if you go to www.bharatsangani.com, you can see all my views and thoughts about these things. and let the mentor guide you through it. And otherwise, this could be a very dangerous game. And I've seen, heard, mentored a few people who have lost their shirt in trying to mimic somebody. Please, please, please do not mimic somebody. Just don't go by somebody saying, hey, invest here and everything will be fine. I always have told them that, listen, that there are three most important decisions you make in your life, in my mind. Okay, you make a lot of important decisions, but three very important. First is your profession. Second is your partner, and third thing is where you invest. So, look, for profession, I went to school for 30 plus years. We all go to school for our profession for decades, right? Then second is partners. I mean, we don't go and marry the first person on the road that we meet, right? We do our due diligence, we spend time, we date, we understand. A lot of people spend months, years, just to find the second most important part of our life. That's the partner. And third is the investment. See, if we are spending decades and decades for the two most important part of our life, don't you think that the third most important part of our life, we can just go to our friend at a party and he tells you do this and you will be equally successful. So I think if you take things seriously, that every dollar that you made doesn't mean you can throw it away. You need to protect it. Protecting principle is more difficult than making money. So if you can keep that in your head and say, this is the third most important part of my life, I'm going to make a decision about, let me take a step back, let me think, let me get a mentor, let me understand it and put my time in it, and then I'll invest. As you and I both have heard, to become a master in anything, it usually requires 10,000 hours, right? And this is no exception. You truly, truly need your time into it before you can save yourself from all the bad outcomes that is out there.
It's very much a life, it sounds like, of intentionality, which is what I try hard to talk about a lot on the channel. I mean, when it comes to investing in stocks, investing in real estate, due diligence, be intentional about it. This is not a get rich quick game. I mean, I like how you even shared, right? Like, we're making important decisions all throughout our life. Why do we make arguably the third biggest, most important decision, this income stream, based off the cocktail party whispers? It doesn't make any sense. But I want to talk about debt, because a lot of people, when they enter real estate, they start to take out the loans and use debt to their favor. Can you talk to us a bit about navigating through debt and construction costs and kind of what it takes if someone's ready to pull that real estate trigger? How do we navigate debt and construction costs?
So first you need to figure out is, are you designed for debt or not? If your mind is debt averse, which I have a few people whom I know, they are like that. I am a debt king. I don't have any problem borrowing, and I'm doing that against my dad's wishes and advice. But I've learned to borrow and I've learned to pay it back, so it has been okay. But if your mindset is not to take debt, you will lose sleep in real estate business, because it's very difficult to replicate returns that you really went to this business without having a debt. So first make sure that your mindset can accept debt and you can go to sleep, because let me tell you, nothing in life is worth when you lose sleep every night. It's just not worth it. So once you determine that your mindset is not that kind, then you start to understand debt. Now, whatever I'm going to tell you is in general experience, okay? Because everybody falls into different category and buckets, so it may not apply to everybody. So I don't want anybody to get upset with me that whatever I'm saying is not right for them or wrong for them, etc., etc. Or so this is not the only way to do business, okay? But the most important part about debt, if you can get a non-recourse debt, that means if whatever happens to the project, they will not come and take your car. They will not come and take your house. They will not come and take your bank account. They will not come and take your future income. You must get into non-recourse debt. That's number one requirement in my mind. Number two requirement is never over leverage. If you can keep your leverage somewhere between 50 to 60% of the present value of an asset, you will relatively will be all right under any given circumstances. So if you follow on a very high, there are a bunch of other things you should also think about, but on a very high level, if you just follow these two rules I just told you, 99 out of 100 times, you will not get in trouble with debt for rest of your life.
And in terms of construction costs, it's the same. It's used with debt.
So construction cost, you touched a very, very tough statement to even make. We have never ever seen the escalation of construction costs that we have seen in the past 5 years, especially after COVID. It is unbelievable where the prices have gone up, the material, the people, the labor, etc., etc. So unless you truly know how to manage construction and you understand construction, stay out of it. The only way you want to do construction is you want a fixed price guaranteed contract, and with a reputable contractor. You don't want even the guy with a truck and a fax machine to be your contractor. I'm nothing against people with truck and fax machine, don't get me wrong, but because he will take your money, he will never deliver the building that you're looking for, and you won't find the truck, and you won't find the fax machine, and you won't find the guy. And all you will end up is losing your money. So you need a reputable contractor, and you need a fixed cost guaranteed construction. If you do not understand construction, if you not manage construction, please, 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 and another 1,000 times, please, do not get into construction business managing yourself.
So, I mean, look, let's talk REITs, because it sounds like if you're not for debt, don't go in real estate. If you can't handle the construction, I mean, don't go into construct. What about REITs? What are your thoughts on REITs? Is this just the safest option for an investor who wants to get involved in real estate? But again, we're looking at all the cards on the table. Shouldn't this just be the easiest route for someone? And why should someone pick REITs over real estate or real estate over REITs? How do we know the differences there?
So again, there are groups of people. If you have the time, energy, money, managing people, you can do everything by yourself. If you don't have that, but you have money that you can put it aside and not have to worry about it, you can go with a reputable firm, and we call it Reg D, and you can invest in those things. You don't need to go to REITs. And if you don't have anything else, and then you say, I just like to invest in stocks. So there are public REITs and private REITs, okay? So I'm assuming you're just talking about public REITs. So public REITs are the places that you can go and invest. But then you're not investing in real estate. You're investing in stock market. So I don't consider that as investing in real estate if you're just going to invest in a publicly traded stocks, because it will sway a lot more than the value of the real estate. In fact, it will sway a lot more on the market conditions and the people involved and other things in the macro atmosphere around the world than actual underlying real estate. So I don't even consider that it is investing in real estate, although characteristically speaking, it is real estate investment trust. That's what REIT stand for.
Now, a lot of us, I mean, when we're building up these investment portfolios, at least in the stock market, I mean, we're overloading sometimes our portfolios with, numerous amounts of holdings. But on the real estate end, some people can load up on their property count, dozens of properties, trying to manage maybe one too many properties. Is there a magic number for somebody in real estate to stick to or to aim for, maybe when they're getting into real estate? I've even myself used to work in real estate in Manhattan, and, even looking in New Jersey then at properties. And the one question that always comes up is like, well, do I go single family? Do I go multifamily? You went into hotels, right? Like, how does one come to kind of find their investor profile?
So let me answer the first question first. What you said, well, how do you decide how much can you manage? So let's answer that question first. The way I think, and this is a very simpler way of solving a huge issue, okay? But I'm known for that. I usually have a simplest answer to the most complex questions. And the simplest answer is, if you are putting more than 60 hours a week and you still feel overwhelmed, you're not caught up with what you're supposed to do, you've stretched yourself too thin. That's the time you say, I need to relook at my life. I really do relook at number of properties I'm running, number of properties I'm managing, etc., etc. So that's the simplest answer to your first question, okay? The second question is, how do you find your passion? Is it multifamily? Is it hotels? Is it shopping centers? Is it industrial? What do I really want to do? And that goes back to this too short a session to talk about those things. Every single segment has its own benefits and all negatives, and again, your mindset, how much money you have to invest, how long can you invest, what returns are you expecting, where are you located physically, how many people do you want to employ into it. So all of this becomes a huge matrix, and based on that matrix, we can generally put people into that category where you should go. But it's not something that, oh my God, when I came out of my house and I saw this beautiful multifamily being built, and I think I am built or I'm designed by God to own multifamily buildings. That's not, I guarantee you, God didn't design you to own multifamily. I promise you that.
You got to get to know yourself as an investor, it sounds. I got to ask, investment strategies and shifting economies. I mean, some interesting things, just on the docket, even for us today, right? We had, or just yesterday rather, Jerome Powell came out. He slashed interest rates, but he's also saying inflation might rise, back up. We got President-elect Trump heading back into the White House. So, I mean, talking about the economy and just events, global events even, there's a lot of factors that are going in here that can shift, your day-to-day and my day-to-day at any given moment. Are macroeconomic factors and conditions something that you look into as a real estate investor? Or are they something that you don't really need to look into as an investor? And how exactly do you shift or have strategize rather through a shifting economy?
101%. 101% macroeconomy will always play a role. What you do not want to do, you do not want to predict the future. Predicting the future means you are projecting yourself as a god. Even sometimes I wonder even God knows what the future is, but that's a different discussion for a different day. But so predicting the future is a mistake. So when you walk in the parties, the cocktail party you mentioned, everybody says, what do you think what is going to happen next year? I don't participate in those kind of discussions because nobody knows. And if you believe that somebody knows, then you're a bigger fool than him. So the answer to that question, then simpler answer is, be prepared to react. So if you want to be in real estate, you need to be real estate all the time, in good economy and bad economy. Now you just react. Every cycle, you figure out what is going to make sense today and what kind of investment, what kind of returns, what kind of debt, what kind of construction cost, what kind of equity I want to put today that will make sense. And you keep playing this game. It will all even out with time. And now you're not predicting, you're not under stress, you're not testing your mental capacity as a god, and you're only reacting. Life becomes very easy, very simple. You're never out of the market. You're never not in the market. You're always in the market. And good real estate will make money someday. It may not make money the day you want it to make. Someday it will make money when the cycle changes.
So talking about the cycle, Doc, and interest rates in of themselves, how do interest rates sway the economy, and moreover, how do they sway, a real estate investors' opinion or strategy?
For real estate, you brought that up very nicely, that debt is the most important component to get you the leverage position to increase your return. So without debt, most of the real estates won't make that much of a sense. So if you have to have a debt, then interest rate is probably the most fundamental thing you to worry about, right? So interest rate is probably one of the top influencing factor for any real estate investment, because increasing interest rate will decrease your NOI, right? Net operating income. And decreasing NOI will now increase your cap rate. Increase your cap rate will reduce the value of your asset. So it's all in a circle. And it's vitally important that you understand the value of the debt, and you properly plan for it, depending upon the present circumstances. Doesn't mean you need to predict anything future. Just see what the debt values look like and plan accordingly. That's it.
Sure. Are there any precautions that you can warn us about before we get invested into real estate or head in this direction?
No, again, they're really not much of a precaution. I think if rightly done, investment is a great part, a great way of investing. Just follow the rules we just talked about in the past 1 hour, and I almost guarantee you, you will not you will not be sorry, and you will have a great future in real estate. Real estate is a great business to be had. Just do it the right way.
So, Doc, before we officially jumped on and I hit that record button, you actually shared you would have done things a little bit differently. And I want to ask you, what exactly, knowing everything you know now and where you're at today, what were some of the things that you would have done differently?
I don't know that I would have done things differently. Whatever I did was extraordinary risk. And the reason I had to take that risk, because I came with $10.45. You cannot make me any poorer, right? So I had nothing to lose taking risk. And I was in a very unique situation to be able to take the risk. But mind you, not many people are like me, that they start with $10.45. They are doctors, they have a built-in income. Believe it or not, I still practice medicine. See, if everything fell apart tomorrow for me on my business side, I can still go make a living and maintain a family by just just doing medicine, like I used to do many years ago, and I'm still doing it today. So it's a very unique circumstances. All I would recommend people that do not take unnecessary risk with your money. If this is your only money that you have, and then make sure you have enough hours in the day to manage your money. And that's the only thing I would have done differently if I had that option. But I didn't. I had to make it as fast as possible, and I was willing to take the risk because I didn't have much to lose. Losing $10 is not that big a deal, right?
It reminds me of a Tony Robbins quote, to burn your boats. I mean, I don't even think you had boats to burn, but at the end of the day, you officially burnt all your boats and you went all in, something that I can always appreciate. And you're a man of many stories. So I want to ask you, what's perhaps one of your biggest lessons learned throughout the years, past 30 years, maybe one of the biggest mistakes, but ultimately turned into just good tuition because you learned a lesson?
Oh, that's a very good question. I would say, do not overestimate your abilities. Always be humble. And many times I felt I can do it and I don't need help. And I was burning candles at the both sides. And that's why I brought that up when we were discussing that if you start working more than 60 hours a week, I think you're putting too many hours into it, and you should ask for help sooner than later. I'm on the other side. I work for 100 hours before I recognize, oh my God, this is too much. And that probably one thing, if you ask me if I will change something different or what is one of the mistakes I might have made. But besides that, I don't know that, considering everything what I did and how I did in the circumstances I was in, I would do things differently, or I have any regrets about it, or I would say, oh my God, I wish I had done that differently.
Doc, tell us your perhaps biggest success story or your best investment.
So I don't count in terms of dollars, because then we can talk about very easily which one is uh, did well and which one didn't do that well. But the most successful investment in my mind is, I always have an exit planned, a date and the amount before I put my dollar in. And every time I accomplish that, I feel very successful. And it could be just a dollar investment, doesn't matter. It could be $100 million investment, it doesn't matter. I feel like I'm God, right? When I'm projecting something and I'm coming out exactly that time, exactly the same kind of outcome. So those are my success stories. There are a bunch of them like that, and I love all of them. And there are some stories which went 100% opposite to what I planned, and things went really bad. Then I rolled up my sleeves and worked at it, and most of them we could recover and did well. So life is life gives you lemon. You just make a lemonade out of it whenever it gives you a lemon.
I love it. I want to ask you a bit of a personal question.
How much
but I
time
think
do we need? Because I need to go in a few minutes. Are we done pretty much?
about another, we have 3 questions left.
Okay.
Can we manage? We'll do it. We'll do it.
Yeah.
Simplistic. I'll ask you quickly here, just when it comes to picking a partner in life, because that's arguably one of the biggest investments we can make. When you go about picking a partner and to partner with somebody and even building a business to be at your left or your right hand side, is there anything that you would recommend we all look for?
That's a very, very important question you asked. And I actually have a spreadsheet that I recommend people to do it. And very simple. And if people reach out to you, I'll be glad to send it to you, and you can give it to anybody who reaches out to you. But see, it's a pre-formed spreadsheet. When you are dating somebody, you first need to make sure what are your absolute deal breakers. Like, some people, I don't want somebody who is doing drugs. I don't want somebody who is gambling. I don't want somebody who is smoking. I don't want somebody who is whatever. So you need to create a list of the deal breakers. And there are some that you say, I can live with it, but I need to have a corresponding adjusting positive factors for it. So that's number one, that you need to create your own spreadsheet, what is important to you when you're looking for a partner. And the most important factor I have found is flexibility and expectations. The less you expect from your partners, the more chance that your relationship will last longer. And you just want to see that reciprocalness in the opposite person. If that person expects too much out of you, that relationship is bound to fail, or somebody is going to be an underdog and will not be happy. So these are the two things. Create a spreadsheet of what you truly want in your life with deal breakers and adjustments, and flexibility and expectations. These are the factors I think are more important. By the way, I've been married 41 years now, so I think I've earned the right to talk a few things about relationship.
There's the massive success. Doc, I got 2 more questions for you. I'll popcorn them over to you. The secret to long-term success. Can you give it to us in a short brief?
Sure. Do it because of your passion and because you want to work hard. Do not do it because your friend did it and you want to beat somebody, or you want to beat time. You're a bit too old and now you need to catch up. Don't create artificial deadlines in your life. Just say, I'm going to work hard. I'm going to work with passion, and whatever comes will come. Let God make the decisions for you. If you believe in God, it doesn't necessarily you have to believe in God. I'm just saying, let whatever you believe in, let that play its own course. You give away all the responsibility of having a deadline for something to accomplish in a particular day, in a particular amount. You just say, I just do it for my passion. And if you do it for your passion, life becomes fun.
I love it, Doc. The last question I have for you, it's my favorite question to ask every master of the market who joins me here. And I'm especially happy to ask you this question. If I were to give you $10,000, which is minuscule for you at this point after that $10 stunt when you first came, $10,000, what would you do with it? And why would you make that move?
So that's a very good question, and I'm literally going to take the number as 10,000. If that is the only dollar you have that you will not ever need, and there is no hope for more money to come, I would say take the $10,000 and buy QQQ stock, and forget that you ever had it. 20, 30 years from now, no investment will produce the return as safely as QQQ will produce for you, because that is always will be the top 100 companies of United States on NASDAQ.
There you have it, Dr. Bharat Sangani of Encore Enterprises, a man who has completed well over $2.9 billion in real estate transactions over the last 30 years. So join me in thanking the doc for joining us here on Masters of the Market. And until next time, we will see you all there.